Well, guys, it has been a year now since the Fed announced the first major rate hike. And after their meeting this month, it looks like they are raising rates yet again. This is the ninth consecutive hike within the past year. They mentioned that their target is to hit 5.1% by the end of 2023, which means we can expect at least one more quarter point hike this year. But that doesn't mean we will see any rate cuts to quickly follow. The Fed will likely pause for an extended period of time until inflation is well under control. One of the main contributing factors to inflation is housing, making up over a third of the overall CPI report. Chief economist at LPL Financial wrote, housing costs accounted for over 70% of the increase in February and is the largest contributor to the monthly growth rate. So what else is constraining the market? We have seen a major decrease in rebuyers over the past year or so because of the strong locked-in effect. There are a lot of homeowners that may like to move, but because they locked in at such a low rate, it does not financially make sense for them to make that move right now. A recent report put out by Goldman Sachs stated that 99% of homeowners have an interest rate below what's currently being offered in the market. More than 70% of those have a mortgage rate below 4%. So even if we had a major increase in new construction homes this year, we would likely still have low inventory. However, we did just recently get news that there may be some signs of slight improvement after existing home sales fell for 12 straight months. According to the National Association of Realtors, existing home sales rose 14.5% in February. The good news for new construction is home builders are confident going into the spring market. The home builder sentiment rose again for the third straight month in a row. Let's take a further look into the real estate market here in Louisville, Kentucky. For February, we had 1,302 new listings, which is slightly down 6.5% from last month, which may seem like a big dip, but this is actually common this time of year. Historically, we then see March to be a busy month for new listings. The trend continues as we go into the summer months. The number of pending home sales for February came in at 1,076, which is slightly down from the month before. And the median sale price for February was slightly up from the month before, coming in at $243,000. But this is still down 8% from its peak last June. Some buyers are even considering multi-generational households to help offset the affordability crisis. Having more working individuals under one roof may help pay for housing. FHA is also making an attempt to help certain borrowers. They announced that they will now allow homeowners who default on their FHA loan to have the option to do a loan modification and stretch their mortgage to a 40-year fixed-rate loan. This is an effort to help prevent them from having to foreclose if they are having a hard time financially. If you look at the statistics here in Louisville, Kentucky, last month we had a total of 931 sales. Out of that, 124 were FHA buyers, which is almost 14% of all homes last month. Now, with the new loan modification available to these borrowers, this could possibly help save some of them from losing their home in the future if they default. As mentioned in my last video, if you're thinking about buying this year but waiting to see if prices come down, chances are you will likely not see that this spring or summer, mainly because demand is continuing to outpace inventory. And these are the months that we see the median sale price at its highest for the year. That's it, guys. If you have any questions about the real estate market, please feel free to reach out. And if you haven't done it already, please subscribe and hit the like button if you've made it this far. And let me know your thoughts in the comment section below.